What do you think? Coke versus Pepsi. We're doing it right now. I love pop. Paul loves pop. And we're going to do, using Paul's 8-pillar analysis of each stock, we're going to look at Coke versus Pepsi. And before we get to that, Paul, I'd love to ask for a moment of likeness from our family, our friends out there. The support has been absolutely unreal. Paul and I have been doing this for 2 years now, and it's finally coming to fruition with a bunch of likes and subscribes. So we really appreciate your help. Go ahead and smash that like button in the bottom left corner. And Paul,
and the reason we do it,
go ahead, Paul,
is we want to be able to provide as much of this as to be free as possible to everyone. And instead of making money off of you, it's making money off of YouTube.
That's a good way to put it,
The more likes and
the
more subscribers we get, the easier it is. A little update. Can I give a little update on the app?
Please do. Go ahead.
I had a meeting yesterday with our developer.
Shut your mouth when you're talking to me.
I think the app is going to be in sooner than we expected.
No way. How so?
Yeah. I'm hoping for a working model for the 8 pillars plus financial statements.
Go on.
At the beginning of second quarter 2020. So 6 or 7 months from now.
I don't believe it.
I don't either. And remember, with developers, everything's always longer than expected. But we are putting our best developer on this, right, Tim? Tim was in the meeting. We're putting our best developer on this one. And I'm hoping that it can get done. If it can't get, it'll be sometime in 2021 for sure.
What Paul's talking about is, we have gotten enormous feedback from all over the world on our
literally all over the world.
Yeah, I mean, from our 8-pillar stock analysis, and we're going to go through it right now. And what Paul wants to do is, in the future, develop a one-click app where you can subscribe to on a monthly basis and really analyze, do all the grunt work of analyzing these stocks all in one motion.
And I'm going to give you.
Go ahead, Paul.
I'm going to give you. So everybody looks at my Y charts here and goes, "Oh, that's so nice." I'm going to create another version of Y charts that's easier for you guys to use on your own. That way you don't have to sit there and pay $4,000 a year, $5,000, whatever I pay for this thing to be able to use it. So, Bloomberg Terminal costs $27,000 a year. This costs like $5,000 a year. This app will cost you $10 a month. On the high side, it'll have 8 pillars, financial statements, and then real estate calculator, all these other things to be able to handle your investments.
I love it. Let's get right to the board and get after Coke versus Pepsi. Go ahead, man.
So do you think Coke versus Pepsi is a bigger rivalry than Ohio State, Michigan?
I don't think it. No, I don't think people get arrested and foul mouth each other. I don't think they hate as much as each other over Coke versus Pepsi. Like I know, and I think you do as well. When I sit down at a restaurant and I say, "Can I have a Coke?" and they say, "We have Pepsi," I frown a little inside.
What's funny? So when I was younger, I was a Coke fan.
Go on.
Then I became a Pepsi fan for some reason.
Well, they were huge in the 90s, if you recall.
They were huge.
Pepsi was huge.
I didn't realize that.
Yeah, I think at one point remember Pepsi Clear? They had Van Halen on board.
I do remember Pepsi Clear. You can go on eBay and look up Pepsi Clear and buy old bottles of Pepsi Clear. Still with the liquid in it.
And they got a hold of the Olympics somehow. They were sponsoring maybe the Olympics. It was really cool.
Did they sponsor the Olympic bomber in 1996 or no?
Too
soon.
Too soon on that? Paul, people came for Coke versus Pepsi. We'd love to get to it. Let's go.
All right, so we have 2 tabs here. Everybody really can't see it, but we have 2 tabs here. We're going to start with the Coke, and what we're going to do is, I think we should do 2 pillars at a time. We'll look at Coke, then we'll go to Pepsi.
I love it. Go for it.
How does that sound? Okay,
yeah,
so first off, what's the first one?
Pillar number 1 is PE ratio less than 20.
Okay, we're here on Coke. PE ratio 24. So a little high, not the astronomical, but it's high. Again, not a reason to say no, not a reason to say yes, it's just high.
Okay, how about pillar number 2 is profit margin?
25%.
Are you surprised by that, Paul?
No, because I imagine it probably costs very little to make an extra drop of Coke and an extra drop of Pepsi or whatever it is. Their gross margin, 58%. If you remember, gross margin means every dollar extra they sell. I was looking at you. I lost my train of thought because I was looking at you as you were taking the sip. It's like in Wayne's World when Garth sells out with.
We will not bow out.
We will not sell out. A new generation.
Okay, go
my
ahead,
generation.
Paul. Keep going. Wow.
So I'm not surprised by this. It's probably pretty high. So that's for Coke right now. By the way, I want to make note. We always talk about price of a stock.
Go on.
The company is worth $218 billion market cap.
Circle it a little bit.
For Coke. Coke is $218 billion market cap.
Wow.
Its price is 51 per share.
Go on.
Let's go to Pepsi. Pepsi?
As always, make sure you're smashing that like button. Whenever Paul takes some time to go through some boards on wide chart, I take time to smash that like button. Just please, real quick, just smash it in the bottom right-hand corner. We love you guys.
Pepsi, why does it do that? It's shifting. Pepsi's market cap is $197 billion.
Just a little less.
Lower
Yeah.
than Coke's. But look at Pepsi's price.
Oh, wow, 3 times the price.
That's exactly it. So price is not what you look at.
What is this telling you already, Paul?
Nothing.
Nothing?
It has told me nothing.
I'll
That
be
is my
darned.
point. When everybody looks at price, it's irrelevant. Because Pepsi's market cap is actually less than Coke's, but the price of the stock is 3 times more because Pepsi has 3 times more shares outstanding. That's the only difference.
Oh.
That's it. Don't worry about any. That has nothing to do with anything. I'm just going to focus on this market cap like I always do. So,
What is the PE ratio for Pepsi?
PE's ratio for Pepsi, it's actually higher. It's 28 right now.
Interesting.
Their profit margin, wow, look at that. Okay, so I think the profit margin, oh wow, 13%. It's a lot lower than Coke's. The gross margin is much higher. I mean, it's the same at the same level, it's 55%. But their profit margin, now, I didn't look at Coke's. Maybe Coke, I should go back and look at Coke, and maybe we have to alter this. But maybe Coke's profit margin was a little skewed.
Okay, look at it.
No, that's weird. Wow, incredible. 25% roughly, okay.
Just way better than Pepsi, huh?
Yep, so right now with Coke and Pepsi, we have 1 check mark each, and it was on profit margin. The PE was bad, so we have an X on PE. We have 2 check marks on the profit margin. What's next?
How about revenue growth over the last 5 years?
Now this is going to be interesting
Or
because these are
Coca-Cola.
2 very large companies. So you have to sit there and go and look at it and say, how's their revenue go? Okay, this is Coke, guys. Look at this. 44, 41, 36, 34,
Come on.
37.
Oh, no.
So they have decreasing revenue. Now, we have to understand why is that. I don't know. Maybe they sold off some divisions. Maybe they've sold off other things that they had that were big. They want to focus more. I have no idea. But right now, this is a big X on Coke. Again, no single pillar is a reason to buy or sell a sell a company. But this is kind of like, well, Coke's such a big company. How many people out there would have guessed that Coke's revenue is down almost 20% in the last 5 years?
I would assume profit growth is going the same direction.
Let's
Shall
find
we
out.
look?
Let's find out. Net income. Oh my gosh, it's not.
What?
7.3, 6.5, 1.25, 6.4, 8.9. Check mark there. Why is that?
Tell me.
I don't know. So guys, everybody comments on these videos, which I love, and they ask me to go even further in depth. Unfortunately, going further in depth involves reading 150-page 10K. So it's not going to be possible for us. But what I want you guys to understand out there is these are good questions that need to be asked that Seth just asked right there. Why is that? I have no idea. But understanding why their profit is up from 7.3 to 8.9, even though their revenue is down 20%, is something important to understand. I don't know why. Could it be they sold off, like we said before, they sold off divisions and it ended up having a one-time gain? I have no idea.
Shall we slide over to Pepsi?
Let's go to Pepsi.
Revenue growth over the past 5 years, pillar number 3.
Oh, it is a different story over here, guys. Over at Pepsi. 63, 63, 63 and a half, 64 and a half, 67.
Okay.
Check mark for Pepsi. So Pepsi has the revenue growth. And if you see, their revenue is actually double almost what Coke is. Everybody thinks Coke is a bigger company. This revenue here was 67 versus 37.
It just showed it's double the revenue of Pepsi?
Yeah. No, Pepsi has double the revenue of Coke.
How can that be?
I don't know. But this is all the great stuff about investing. You have to go into the companies and figure out. Everybody in the world would have thought Coke was bigger. Now, maybe Pepsi is bigger internationally. Is that the case? Is that possible? I really don't know.
Which one do you think spends more money on marketing?
I would guess Pepsi.
Because they're everywhere. They're doing like, they will.
Well, I think they have to. I think Coke has a better brand than Pepsi does.
They will sponsor the Super Bowl, and I kind of just like chuckled to myself, like, oh, they're trying, right? It's like seems like they're trying to do good.
Would you have guessed ahead of time that Pepsi would have been the one with increasing revenue, that Pepsi would have been the one with double the revenue?
Not in a million years. Now, is it what? Am I wrong? Is it the Mountain Dew that maybe we're missing out on, Paul?
Oh, you know what's funny? I go to Bob Evans every Monday with Mary. Every Monday. We started doing this about 3 years ago. We loved Bob Evans because they had Coke Zero there. Then all of a sudden,
Story time with Uncle Paul.
all of a sudden one day,
Go on.
The waitress said, Paul, I know you love Coke Zero.
Uh-oh.
But in 2 weeks, we're losing Coke. I go, what? Why? They said, Paul, Amish people love Mountain Dew. If we change to Pepsi, we're going to increase our profit by $15,000 per store. That's what they said to us. So they said we're switching to Mountain Dew to Pepsi.
This must be the kicker, because Diet Mountain Dew at Taco Bell at 11 o'clock at night with a couple cheesy Gordita Crunches in your hand
is heaven.
Oh, you know that Diet Mountain Dew is the best stuff
I
ever
actually
made.
don't even like Mountain Dew.
That'll be our podcast for today. Like, subscribe below. We're leaving. I'm unfriending Paul right now. Paul, continue. Let's go to profit growth for Pepsi.
Pepsi, 5.5, 6.3, 4.9, 12.5, 7.3. Big fat check mark.
Another check. You like this.
I mean, this is better than Coke's.
I'm confused. Go back to shares outstanding with Coca-Cola, please.
Okay.
Oh, you're doing so good, Paul.
I'm
so
actually
handsome.
floored. I'm
You're on your
actually
toes
floored by all
today.
this.
You're looking great. You're feeling great.
I feel great, man. I feel great. I hate my life. I hate my job. I hate my dad, but I feel great.
Go on.
Another Wayne's World reference. We're all in the Wayne's World today.
You do love your dad, though.
I do love my dad. My dad's awesome.
Go on.
4.6 billion 10 years ago, 4.27. It's going down pretty consistently. By the way, I think I'm going to change this pillar to 5 years of, I want to look at the most recent 5 years. 4.3, 4.3, 4.27, 4.259, 4.276, check mark. Not by much, but it's still a check mark here for Pepsi.
That's Coke, right?
I'm sorry, Coke. Coke,
Okay,
sorry.
5 years.
I'm going to do the Pepsi one real quick, by the way, too,
Right now?
since we're right there.
Go ahead.
Last 5 years, 1.47, 1.44, 1.42, 1.41, 1.4, check mark.
Both are going down.
Both are going down.
Nice to see.
Nice to see.
How about assets, current assets greater than current liabilities, pillar number 6?
Pillar number 6, we're going to go to the balance sheet. We're going to go find our most recent quarter. I like to go to the quarters for balance sheet on these items since it's most recent. Okay, total current assets right now.
This is cash from operations?
No. No, total current assets is basically
cash
that's on hand.
I'm on the wrong pillar.
Yes.
Yeah, pillar number 6.
Everybody, I hope you guys are all better at learning than Seth is because he has a PhD, but it was crickets. Okay, so $30 billion in current assets, 29.37. Total current liabilities, 26.85. So that means a big old fat check mark for Coca-Cola Classic.
Okay, this is good news with assets doing good. Assets over liabilities.
It is better. Let's go to Pepsi. I'm just skipping around to Pepsi here.
Go for it.
Maybe we should just go Pepsi, Coke, back and forth on
it.
each one. Okay, now go to the balance sheet, quarterly. I'm glad Y Chart's letting me sign in on 2 different things. Total current assets, $24 billion. So a little bit less than Coke's. And their current liabilities are $26 billion.
You're upside down.
26 billion, X mark. I don't know why that is. Again, it requires further, and I'm gonna repeat this over and over and over. For our subscribers, when we have 1 million subscribers and their original 1,000 are the original gangsters, and they're like, Paul, we've heard this 1,000 times. You gotta remember, I'm talking to everybody like it's their first time hearing it.
Yes.
No single pillar here is my be all and end all. The cash, current assets over current liability. Today I actually ran a screener. Of the 500 companies in the S&P 500, not even all of them don't even have there's still a big chunk that don't have more current assets and current liabilities. A big chunk. It's like 30% of them don't have it. So it's not the be all and end all. It sounds a lot worse than it actually is. Next one.
Pillar number 7 is free cash flow growth, which is cash from operations minus capital expenditures, Paul.
Okay, so Coca-Cola Classic, we're going to the cash flow statement. I did not listen to anything you just said. I'm assuming you were right on that one, which is probably the wrong assumption because you're getting things wrong all the time. 8, 6.5, 5.3, 6.1, and 8.4. Check. Chickadee check. Now we're gonna blend this together. Do the next one less than 20.
Oh yeah, this is pillar number 8 is
19.8,
price to free cash flow less than 20 over the last 5 years.
26.9, 35.3 divided by 5 equals 7.06. Call it 7 times 20 equals 140 billion. Their market cap for Coke was 217 billion X. So the free cash flow growth is a check mark.
Nice.
The price to free cash flow, less than 15. Sorry, less than 15 we wanted. No, we wanted 20. We wanted 20.
Yeah, 20.
Is 100 is an X. So that is an X right there. Let's go to Pepsi.
Go ahead. Go ahead.
Annual on annual. 10.8 minus 2.7 is 8.1. 7.6. 7. 6.2. And 5.4. X mark here. It's actually decreasing every year for Pepsi. Every year their free cash flow is decreased. Every single year. 8.1 plus is 15.7, 22.7, 28.9, 33 point, I don't know, call it 34. Divided by 5 equals 6.8 times 20 equals 136. Is that right?
Yes, 136.
Also an X.
Did you really just do 6.8 times 20 in your head somehow?
Yeah, it's actually not very hard.
Well, I mean, yeah,
What's
I guess you're
6.8
right.
times 2?
All right, sorry. I got
13.6. Add a 0.
All right, wise guy. Okay. X again for price to free cash flow.
Yeah, these aren't very good, guys. I don't think we had a very good showing here between Coke and Pepsi. It's kind of like this current election, the better of two evils.
So let's to recap. PE Coke is at 24, Pepsi's at 28. Profit Coke is at 25, Pepsi's at 13%.
Profit margin.
Yeah. Let's see.
Decreasing shares, they both had it.
Yeah. Profit is up. Actually, revenue is down for Coke over both.
Revenue is down for Coke.
Assets over liabilities
was
for
good for
Coke
Coke,
is good and
wasn't
bad
good for
for
Pepsi.
Pepsi. Free cash flow is better for Coke than Pepsi, and price to free cash flow is an X
For both.
for both.
They were
Paul,
both very bad.
So, what is your take on all this, Paul?
I actually would not go further on either one of these.
No, you're done.
Done. Now, if you're putting a gun to my head and say, which one are you buying? I'm going to say Coke, and the reason being I like their increasing free cash flow. If you said, Paul, you have to make a decision based on these 8 pillars, it would be Coke, because I like it scares me that Pepsi has decreasing free cash flow every single year with increasing revenue. Now, there might be a story behind that, but again, I'm saying from a standpoint of gun to my head right now, based on the 8 pillars, which one are you buying? I would say Coke. Better brand, increasing free cash flow, even with decreasing revenue and bigger profit margin.
In the end, Paul, I really love when you say, we're not. I was actually criticizing you on our own channel because I was saying, Paul, you're so disciplined, and I'm just getting tired of it. I just want to buy all this exciting stuff, and then you remind me that it's not our job to buy, it's our job to
Exclude.
Remind me that
Basically,
again.
our job is to say no. Your job as a good investor is to say no. There are thousands of companies in this country to buy from, that you can buy from, that you can buy their stock. So your job is to find 20 or 30 that are good companies, good financials. You'll find them, just learn to do the work. We haven't done the charts yet, by the way, so we have to do that still. But your job as an investor is to say no. It's just like dating, guys. Your job to date isn't to sit there and the first person you date say, I'm going to marry this person. Your job is to sit there and say, do I want to marry? Can I see myself committed to this person forever? If the answer is no, you move on. Be done. Onward and upward. Right? Same thing here. At least you get 20 shots at it here. Warren Buffett has this thing where he says, you should have a punch card with 20 or 30 potential holes. And every time you make an investment, you punch the punch card out, and you don't get them anymore. That's how you should look at investments. If you were only to make 20 or 30 investments, which ones would they be? But everybody here thinks that everybody in the world thinks you have to make every investment. No. Are there people who do that? Peter Lynch bought like thousands of companies and still beat the market. But what he did, what people don't remember, is he would like a sector, buy all the main companies in them, and then exclude after 2 or 3 months. As time went on, he'd be like, I'm getting rid of this, getting rid of that. He would start saying no then.
Mm-hmm.
So that is your job as an investor. It sounds boring, but that's the way it is. Can we go to the technicals now?
Yeah, talk to people about what you're doing right now.
So what we're starting to add to these live videos, not these live videos, these videos, is looking at the trends of these companies. Because a lot of times when we have a Bloomberg terminal, and we can run back tests to see how different trends work. There's a thing called a moving average. It's the stock price over X number of days. So a 50-day moving average is the average stock price over the last 50 days. 100-day would be the average of the 100, 200, et cetera, right? So what we have found is when companies start to go over certain marks, they start to be, if like a short-term trend, like a 50-day moving average goes above 150-day, it's a positive sign and it can do well. We back tested these and they do beat the market. Not by a ton, but they do beat the market. So we're going to be comparing the 50-day moving average to the 150-day and see where the trend is right now.
Go for it.
Okay, so for Coke, this is what I don't like about Y charts. I want this, I mean, we can just keep it at the 50 and 200. It's all pretty much the same thing. I know you might laugh at that one, but this is a good thing. If you look right here at Coke, the blue line is the 50-day moving average. The orange line is the 200. So that's 200. That's 50. If you look over here, it recently crossed over. That is a positive sign right now. Oh, this is Pepsi. I'm sorry. This is Pepsi.
Pepsi, okay.
This is a positive sign for Pepsi. This is a positive momentum sign. Does that mean it's always going to work? No. But if you do this over 20, 30-year period of time and always buy at these marks, you're going to beat the market by a percent or so a year. Doesn't sound like a lot, but we all saw how much 1% a year changed your history over 30 or 40 years.
Mm-hmm.
So this is a positive sign. So a check mark here for momentum for Pepsi. Now let's go to Coke. Coke's technical chart. What is there like a thunder? Is there like a bowling alley upstairs?
I hear it, yeah.
To you? Oh, wow, look at this. So Coke recently went below. This was in April, but it's getting close over here to going above. You guys might want to watch this. It's getting close to going above. The 50-day moving average is getting close to going above the 200-day moving average. That's a pretty good indicator. And by the way, the longer your second moving average is, the shorter one goes over, the stronger the momentum case is for it. Like, for example, we ran back tests at 50 over 300-day moving average, and it beats by even more. So the longer your trend, now the only downside is you're going to do it less and less and less because it's really hard for these trends to change on the longer term perspective. Now we're going to do more and more, and I'm going to teach you more and more about the trends. These are very basic things, and a lot of people would say it's too basic. What I have found over the last 5 years of me looking at history is the more basic the analysis, the better it does. Less variables just keeps it simple. And I'll show more about how I look at my value investing, things like that, where I try to keep it as simple as possible. So on this is an X, but it's not a bad, I would keep watching this because if it crosses over that line, it might be a sign for momentum to happen. If you choose to make momentum investing part of your portfolio, you have to be very consistent and stay stable and don't think. Just follow what the chart tells you to do. A lot of people get themselves in trouble and they start overthinking, like, well, you know, it just crossed over, but I don't like it. Nope, don't think about that. Just you stick to it and you do it.
Make sure you think about liking that button in the bottom right corner. Smash that like button. We love you guys and gals watching at home on your phone. Thank you for spending some time with Paul and I. Paul, we were laughing about this. We wanted to do this analysis for a while. Coke versus Pepsi. We are Coke fans.
Yes.
And we will never be Pepsi fans, although Mountain Dew.
That's not true. That's not really true. Listen, I've changed from Coke to Pepsi back to Coke. Literally, there was a time where I couldn't stand Coke. And there was a time where, I mean, now I can't stand Pepsi, basically.
Follow us for our live streams. Paul and I are picking them up. Every Tuesday we're doing them, and we're trying to get toward Tuesday, Thursday. So, yeah. So follow along on the Everything Money channel. Thanks for watching, guys. Love you.